So anyway, this is class 2. Again, we covered psychology, brokerages, all the simple stuff, good questions. And of course, that'll be up there tonight. But in this class, we're going to go over, again, this is for beginners. We're going to be going over the basics as far as what stock options are. I need to mute this ASAP. I cannot focus with this thing. 1 second, give me a minute. Let me just fix this. I'm tired of the beeping. All right, there we go. Oh my God, Dimmy. So we're going to be talking about option contracts. We're going to be talking about candlesticks, as well as just the simple things like identifying uptrends, identifying downtrends. Now, for some of you, this is going to feel like kindergarten. That's fine. It's supposed to. This is for beginners. So starting off, oh, that's the wrong slide. Hold on 1 second. Over here. Okay, there we go. So starting off, we're just going to go over what instrument we're trading. Now, this strategy is good for anything, right? But my focus is on stock options. Is this something that I think about every single day? No. But is this something that I hope you all one day will be able to actually utilize because you've made enough money and you're trying to protect your investments or whatever it is, speculate? This would be good to know. Also, you don't want to sound stupid when you try to explain to somebody what it is that you do. But a stock option, right, is literally, and again, most of you know this, but is essentially a contract that gives you the right but not obligation to buy or sell 100 shares, and you can change that number, at a predetermined price before a set expiration date. There are a variety of strategies to utilize it in stock option trading, which can cater to different financial goals and risk tolerance. The way that we think about this is a dinner reservation, right? If I wanted to, if I went to call a restaurant and they're extremely popular, and based on how many people or how booked they are, the more expensive the tables get. So what we're looking at, right, is not necessarily the value, but we're reserving our right to eat at this restaurant, no matter how high it goes. So when we buy a strike price, and it's at a $50 strike, and the stock is currently at 45, and it goes to 60 before your expiration date, you now can you could before then, you can utilize the option contract whenever you want. But you can now buy 100 shares at $50, which for a lot of people can be a great way to speculate, a great way to straight up just reserve your spot if you think something is going to go your way. So again, this isn't something that I'm necessarily thinking about all the time. It's not something that I actually utilize very often, if at all. There has been occasions where I have, but most of those have been on accident. But again, knowing what instrument you're using might seem foolish, but if you didn't know it, you'd look foolish and feel foolish. So, but that is what a stock option is. It is a reservation for both puts and calls, and that is why they rise and fall in value. It's a commodity. It's something that can reserve your right, and those are what the Greeks do. And we're going to explain the Greeks going forward, in a couple of classes here. But they track the price and the value of these contracts. So when we're looking at, why these contracts gain and rise in value, it's mostly on its probability on whether or not it actually can be utilized. If it knows that by Friday that strike 20 strikes out of the money, there's a 0 chance in hell that that's going to go, and so those will expire worthless. But anyway, that is, again, I don't want to over explain this because it is what it is. You can find 1,000 explanations on what a option is. You can find it on Google, but that is what it is. So now, one of the ways that we can employ options, and again, a lot of you guys already know this, but long calls are probably one of the more popular ones. If you're optimistic about a stock's future performance, you may employ a strategy where you buy call options. The strategy leverages your returns compared to buying the underlying stock directly, hoping to sell them at a higher price if the stock increases. Long puts, this is utilized when you're anticipating a downward movement in stock price. You can buy put options to mitigate your losses, again, leveraging your potential returns compared to stock investments. So this is, again, both long calls, long puts, same thing, up, down. Covered calls, right? Here you can sell call options against stocks you already own. This is why a lot of people can't do it, because not a lot of people own 100 shares of anything. But it can generate extra income or offer some protection. So, for a lot of people who are a little more risk adverse, that's something that they typically, a strategy that people like to employ, especially when they don't know. And that's fine. I personally am not somebody who does, I've done it maybe 3 or 4 times, majorly, in a way where I was strategically doing it because I did have shares of something that I was unsure of and it wasn't moving. So I sold the options and I made money off of those. But this, again, does limit the potential for making gains, right? There's usually a set amount that you can make, but that is something that you could do. Protective puts, if you have a long position in a stock, you can buy put options to insure yourself against potential losses. This is like an insurance contract, right? And I actually do this a lot. I did this with PLTR. I've done this with ELF. A while ago, actually, I had equity in ELF. I bought puts. Now, I didn't use them the way, I didn't utilize them, but it did perform percentage-wise in a way where it protected me from what was my runners. That was the last part of my position on ELF equity. But regardless, I didn't want it to become, a stain on the portfolio. So I hedged it and it worked out. Not long-term, it came back, but, anyway, so married puts, this involves owning a stock while simultaneously buying protective puts as a hedge against potential downturns. This is basically me. Short puts, this strategy involves selling put option and obligates you to buy shares if assigned, giving you the premiums up front. This is actually something that you have to consider. Manny talks about it a lot, gamma squeezes and stuff like that, but there is, this can affect the stock price, right? So, but it involves selling put options, obligates you to buy shares. Again, think about the impact on that when you have a lot of people buying puts, right? And they don't work, giving you premiums up front. It's characterized by defining risk profiles and might suit investors aiming to acquire the underlying stock at a lower price and earn a premium if the stock stays above the strike price at expiration. All right, so those are your basic trading strategies. Again, if you're new, this is where you're at and what you're doing. If you're somebody, most of these are for people who have capital, have equity, have investments. All right, so we're going to leave that behind because that's not something that needs to be over-explained. It is what it is. And now we're going to start on some of the basics of analysis, right? Now, I'm going to touch on these things because we're going to come back to them, right? And this is where we're going to really break down how do we draw these channels and how we lay these channels down. So trend and channels, right? Traditionally, most investors were taught to use trend lines, but that's something that is never, that is never something that is used with the PBS. Now, drawing hand lines, who the fuck are you? To think that your hand-drawn line, and maybe sometimes, and the reason that it works is because occasionally, right, we who use channels can find the same maybe resistances, but at the end of the day, it's horizontal levels that are the most important. We use channels to identify, are we going up or are we going down, right? Lower highs, higher lows. We are utilizing those to identify potential confluences, which means where we have a target that is horizontal that lines up with the resistance of a channel, and this can provide a great targeting system. While trend may be true, trend lines offer us no mathematical insight or structure and are known for being one of the main reasons for confirmation bias. right? Short term, people who draw trend lines on the hourly going up, not looking at the date, like it can be a mess, right? So hand drawing lines without having the, and this is why I do say use channels, because channels are going to let you know whether or not what you're drawing is bullshit, right? Because it is math. So trend lines, channels, two different things, right? I think most of you guys, if you've been following me for any period of time, you know that I'm pretty much very against hand drawing fucking lines. It doesn't really make sense. So we use channels again to find establish trend and find control. Can you show? We will go over that, Rebecca. Absolutely. That is something I'm gonna dig in. You're gonna get sick of it. So let's talk about how we identify these things, right? An uptrend is a series of higher highs, and stocks move up, then pull back and retest, typically starting from the bottom and tracing up. Formation of a trend channel, the space between the parallel support and resistance line, form the trend channel. It visualizes the range within which a stock price has been moving. Control. Building a trend, typically we're starting from the low down here and looking for points of contact. Now, this is the first time I've mentioned that. Not at least here in this course, but I know a lot of you guys have heard me yap about this a lot. This is how I find my boxes. This is how I find my channels, right? We're doing that by looking for, and again, the channel typically will show you whether you're right or wrong by your points of contact. You'll line this up at the top and pull it down. It'll line up at the bottom. You got a good channel, right? And if it doesn't look that way, or you don't see points of contact, which also can mean the middle, you'll notice that that actually lines up usually pretty well. You'll even find that occasionally consolidation will happen on or around those channels. But nonetheless, that is how we can establish that price is moving up. This is something that I will absolutely show you guys more of. Okay, I want to try to stick to the slides until we break off. We'll definitely, I promise, we're going to go over it. I'm just going over the basic definitions, right? Points of contact are channels. Are they candle to candle close or wick to wick? So with points of contact inside of a channel, it's just contact. If it's a wick, if it's a body, if as you can see, it favors, in this case, the wicks here, the bodies there, the wicks here, right? I primarily use channels on the 24-hour time frame in order to establish major trend, because I'm not fighting major trend. I'd rather wait for that trend to resume than try to trade that trend down until I have confirmation, right? And a lot of people make that mistake by trying to short things that are in definitive uptrends, right? Even looking at IWM and Qs today is, if you are watching this later on, June 9th. So if you're watching this in the future, you know what happens. But, we are currently in an uptrend. And so the short-term downtrends have been short-lived, right? And that's something that we can take into account as we look forward. It's like, okay, until we lose something we've gained, we're probably not going to be moving down until something suitable reverses us. So, now, I do use channels on lower time frames to establish short-term control in order to look for, say, you've got a small lower time frame hourly channel down. At the top of that channel or at the start of that channel is a box that needs to be punched through. Well, if you break that downtrend and grab that floor, that's obviously something where that channel has been, something useful. I can say that definitively down that control to the downside has been lost. How do you decide if you're using trend lines to follow trend or hoping for a stock to break out or go the opposite way of trend? Okay, so you're saying like there's going to be signs, right? So if I'm hoping for a stock to break out or move outside of the channels, and I appreciate that question, because channels are meant to be broken, folks. And channels, we'll go over this more. I could take, inside of this channel that you see before you, I could take another channel of the same degree, same trajectory, and lay it down here. Now, I'm really good at drawing straight lines, so that makes for a perfect example on what I mean, right? And I'll do it again just to show off. So a lot of the times, if I was observing a channel up here and then all of a sudden it lost it, most of the time you're establishing the whole enchilada, right? Oop. So by consolidating here and moving down, you might have been able to find a channel there, right? But at the end of the day, until you actually establish that whole range, which sometimes can take time, um, but to answer your question, yes, we are. I am looking for trends to break, and the simple answer to that question is typically on the third touch of both. If you've touched the bottom 3 times and you're heading for the third on the top of that channel, I believe typically that it's set to try to break. Now, I'm looking at boxes first, structure first, empty space first. Channels are secondary. If they line up perfectly, which oftentimes they do for confluential targets, that's what a perfect setup looks like. If I draw a channel and draw the boxes and nothing follows, an empty space is whack, that chart goes straight in the trash can. All right, so moving forward, this is, again, we just covered the uptrend. And I'll answer this after this. We're hoping for a stock to break down in the opposite way of trend. And what I said about uptrend would be the same to the downtrend. There's always going to be something structurally that you broke out of. That if you are in an uptrend, typically that structure will go to the bottom of the trend line and bounce. And so a lot of the times, if you break under that structure and you fall underneath there where sellers control the price, that's where that trend will typically end, right? Or if it punches down especially. All right, so downtrends are a series of lower lows as the stock moves down, then bounces and retests, typically starting from the top and tracing down. Now, typically is the main thing here. Sometimes when I'm finding channels, I'll start from the bottom if that's where the majority of points of contact are, because oftentimes you're still building that channel. So going with where the most points of contact is the only thing that I could interject to that rule. Is that you're focused on where the most points of contact are. So if you don't have any points of contact off the top, but the majority are at the bottom, you might be looking at a undeveloped channel. And I will talk to you guys again more on that. So if you guys have watched me before, I'll talk about like mouths, right? Wide fluctuation in price. This actually will establish trends. And that's oftentimes when trend will break. Again, I'll show you guys examples of this going forward. All right, now what I'm doing right now is just showing you guys the tools, right? The basic foundational tools of what I use to do what I do. So one of those tools is the box, right? It's not that important because, I'm just kidding. It's literally everything I do. I focus on boxes from the monthly to the weekly, and finding and establishing boxes is something that's challenging for a lot of new folks. And one of those issues is you're looking at stupid charts, right? Looking at shitty boxes, or just our brain, right? Just training our brain to identify these things takes repetition, but also knowing what defines a box. Now, a box is and I call it the Potter box, right? The way that I use consolidation is why I've named it that. And also I wear round glasses, and I'm white, so, things just fell into place. But this is just one of many names that we call consolidation or sideways price action, right? We define a box by the control on both sides, right? Buyers control the bottom, right? Really good at straight lines, told you guys. Right here, right? And sellers control the top. What? How did that just work? Oh, wow. And that is, again, we don't want to overcomplicate things. And one of the things that I see, and hopefully this can steer you guys in the right direction, there are a vast majority of charts that don't make any sense to me. Right? I don't have all the answers. I only have the answers where the box appears. So if you go to look at a chart and you can't seem to find a box, there is a chance that what you're looking at doesn't have one, right? Now, typically, like, you're going to find that type of phenomenon on low volume stocks that are not institutionally owned and they're not heavily traded, right? You're going to see a lack of that formation. If you want a good example of something that is institutionally owned and will show you with low volume, it has low volume trading wise, but has institutional ownership. It doesn't move very well, but it's Ford. Go look at this 15-minute. It looks like a barcode perfect box. It actually shows you the box, like in its robotic form almost. But regardless, some of the boxes that you guys are looking at are just doo-doo. Like, and one of the reasons I say this is like, I'm not trying to try too hard. The market in itself is already difficult. Solving certain problems are even outside of my reach, right? There are certain charts I don't touch. BABA, PDD, those are things that if it doesn't make sense or I can't solve that problem, I don't have to, right? It's not a problem unless I make it one, right? If I'm trying to figure out what it is, what direction it's going in. I think Twilio is another good example of something that, it is institutionally owned, but it just doesn't, the boxes are doo-doo. I mean, there's a lot of examples I could give you guys. And one of the things I would say is like, as you're charting, learn to throw certain things in the trash. But what you will find is that certain stocks will perform beautifully. Control, box structure, candle closes, perfect. And these are what we're hunting. These are what we're looking for. So when you're looking for boxes, you're looking for control. You're looking for good volume. You're looking for solid candle closes. And if it doesn't appear, right, you're in your 4th, 5th month of finding boxes, your 6th month of finding boxes, and they're not clear, maybe it's just not clear. There's not a box on every chart, right? There is, but there isn't, because some things just don't have institutional control. And we do need that because that's what moves us at a moment's notice. So, but again, this is defined by candle closes on the bottom and the top, right? Or points of contact. If it's not candle closes, it'll be wicks that touch the same price, but don't pass it. And when it does, you go. So, and again, we will be continuing to go over this. Literally, there's a whole class on just this. So the foundation for the Potterbox strategy, we know that after contraction comes expansion, right? So this is highlighting part of that, is that we know that, yes, there's a punchback, but just consolidation itself typically will promise movement. Now we have to learn how to ride those waves. I talked about that yesterday. You are literally a show. I mean, it's foolish to me that some people do what they do, swing for money and day trade to lose it, because you look at how much market movement happens, how often we open up and go sideways, and how difficult that is for most of the day traders who exist on this plane, right? The lack of price action in the during the day, and then what keeps them all addicted is every once in a while you get a treat, a perfect setup, and then everything goes and you're reinvested back into it. But knowing how to move and acknowledging what this strategy is, it's not only highlighting consolidation, but it's also highlighting the time to trade and the time not to trade. This is literally being a sniper via stock market. You're waiting. You're waiting for your shot. You have the pattern. You know the pattern and the plan of which, that stock is going to go, but you might have to wait to take that shot. I luckily, since starting or even creating this slide, again, small flex, but TradingView did add that middle line for me. So now if you have TradingView, you don't have to add cost basis, right? Thank God. All right. Now, these are the basic tools, right? Channels, boxes. Now, yeah, channels, boxes, uptrend, downtrend. These are the basics, right? This is the foundation. But also understanding candlesticks, right? What is a candlestick? Now, in these slides, I try to provide some context as to why I do not ever consider labeling a candle as a doji for the purpose of deriving a signal from it. That is against the law in my book, right? I do not ever consider the name an engulfment candle, engulfees. I do not care unless price or something has been surpassed, something has been broken, right? So whatever candle you open up in range, you could engulf today and then gap down and doji tomorrow. So the names are outside of what we do here. But we're going to talk about candlesticks. Okay, I don't know why I decided to put that in there. It's okay, past me. All right, now we're going to go over the basics of these candlesticks. And again, this is something where we're going to look at it how that works on a chart, but this is just for beginners. So components, a single candlestick on a chart is formed using 4 points: the open, the close, the high, and the low within a specific time period, right? Hourly, 24-hour. The body of the candlestick is formed between the open and the closing prices, while the shadows of the wicks represents the high and the low. It's pretty simple, right? If you open up today here at the open, right, and price moves up, and it moves up, and it taps a target, and then all of a sudden it retraces back down, and price ends at 4 o'clock there, that's your close, right? Now, what we really care about is, what did that candle achieve? Was there a box or a floor that it needed to grab hold on? Did it close on that floor? Did it? Good, because that's typically going to be a signal for whether we're going to buy or sell oftentimes. So with the bearish candle, right, it's the opposite, where you're opening, right, and price might move up, show you the high, ultimately reject, but inevitably it moves down. Looks like we're playing hangman right now. But it moves down and closes at a price that is lower. And again, the same thing is, we're not just focused on what the candlestick is supposed to say to us based on how it's closed, but more or less what it has lost. So let's say you had a floor or a box that was set up and price moved down and closed through it. And then it had another box, a large one, huge one, and it closed underneath the top of it. There's your sign. These are things that we pay attention to more often. So every time frame, 5, 10, 30, hourly. When you say candle close, you mean that? Yeah, that is every single time frame. So if price opens up on the 10-minute time frame, and on that new 10-minute candle, price immediately falls and closes lower, yes, that is the exact same way it works. Every candlestick is trying to tell you the same thing, just for different time frame. You fucking shit. Not you, sorry, Shirley. Dog. All right. So this is basic stuff, but I want to make sure that everybody is clear on the basics here, right? The basics being, the open on a green candle is going to be at the bottom, the close is going to be at the top, and the wicks are going to represent what it bounced off of. And these are important points, right? These are important points. You want to know, what did that wick off of? Or what did that bounce off of, right? Where did you open? Did you open above the box? Well, that makes sense that you exploded out of it, right? So, and again, we're brushing up on our skills or our beginner stuff. We're going to talk more about candlesticks. Now, before I move on, for the purpose of showing you guys candle colors, right, bullish, bearish, I have green and red here. Now, a lot of people, I'm not somebody who is emotionally, I don't know, maybe because I'm slightly colorblind, but I don't have that emotional attachment to red and green. Now my red candlesticks are white on the inside and red on the outside, like a red around the ring. But the green candles, they're pretty much the same. But a lot of people like to change their candlesticks, and that's not something that I'm discouraging you from doing at all. I think it's actually something that, if you do feel like red candles scare you, then change your colors. explore those, whatever whatever colors you like, but a lot of people do black and white. Some people do, orange and, yeah, white, or, something close to, but for some people that draws emotions. For me now, I don't really, doesn't bother me as much. So, all right. Now, one of the things here that I want to talk about is, again, I'm saying these things. I'm saying that candlesticks and their names are not necessarily something that we pay attention to, right? But when we're looking at price, or excuse me, looking at these patterns, we see the flaw in them, right? Because we look at something like, in this example, called the three white soldiers, right? Now, for us, we typically are just going to find a box, highlight empty space, and we're going to take that candle up and out and take it to that close, right? But for a lot of folks, those three bars would mean that a potential trend, oh shit, a trend reversal is likely going to happen. And this is one of the reasons that I do not buy it, right? And this is a smaller, lower time frame example, but it still remains true, right? Where you could potentially be looking at the rejection over the top. You have that same box that you punched back over, and as you can see, that is punched through, and you end up making a new low. So looking at the market, and again, if the candles close outside of an area of consolidation, or they're breaking outside on a lower time frame, that is our sign. Empty space up above, that's where we take that. The three white soldiers would be right here, right? The 1, 2, 3, that's supposed to explain a trend reversal, right? That is what, by definition, they say. It's like supposed to be a reversal, and in fact, this just ended up being a retest. So, in regardless, there is something to be said about moving in threes. Usually, on a breakout, you'll move 3 days in a row and then stop. Inside of a box, you'll have three. Yes, the 24-hour candle is from 4 a.m. to 8 p.m. That's correct. So, but again, what I'm trying to say here, what I'm trying to point out to you guys is that I personally have gone through this whole candlestick name, and I know most of you are here because you probably think that shit's bullshit too, and that's great. But if those of you guys who are like still looking at like dojis, I mean, I've seen it where you'll close with a doji, but you're outside of the box that you were consolidated for a weekend, and then the next day you gap right up. So like I don't. That's not what I put my stock into, literally. So, all right. Now, of course, this is giving you an example of how clean, right? We've got our Potter box right here. Again, empty space was filled up. Oftentimes when empty space is filled up, that is when we look for reversals depending on how or what is underneath us. And in this case, we do drop, we do close, we do retest, and it does in fact punch down. So one of the things that we're going to do now is, can you guys hear me? You don't hear anything? Can you guys hear me? Okay. Tell them to just restart it, I suppose. All right. So now we're going to go over kind of the contents. And this is, again, we're going to go over the box and what typically shows, or what's more important, right? What's more important other than just a candle close, right? Or a candle name. So candle closes are by far some of the most important things that lost the idea. Okay. So quiet. Okay, maybe let me check to see if my audio is okay on my end. I mean, yeah, everything is the same. All right, give everybody just a second to try and figure this out. I wonder if it's people live in California. Okay. No audio. Tell them to, if you guys can't, just tell them to restart their Discord. Try to, yeah. That's really weird. Discord's being weird. Let me just make sure my recording is still going here. Yep, we're still, audio is still being captured there. So, all right. Okay, type from San Diego. Good. All right, I'm gonna continue. I had issues. Damn, I had to reinstall. Okay. All right. So let's talk about this, because again, and this is something I'm going to talk to you guys. We got a lot of time, plenty of time. I'm not in a rush. Candle closes establish control, right? Candle closes and range establish our areas of control into buyers and sellers. Candle closes in structure above or below can confirm levels reclaimed or further continuation in that direction. Wicks are not relevant typically, right? And I should have put that in right there. Typically, wicks are not going to be relevant, right? In terms of a box, right? Because a lot of the times when you, like this wick right here, that wick does not matter to me, right? That's not my point. There's a wick here, right? Wicks are not relevant, but do not show us where the control has been established. Where wicks hit can tip us off to potential for future move or confirm resistance where other candles have closed. So yes, a wick off of the candle close establishes that, right? Same thing across the board, same thing on the floor. Now, there's going to be oftentimes you're going to try to chart a box and its floor is going to be irregular on the 24-hour time frame, and it's not going to make any sense, right? You're not going to find that candle close. You're not going to find points of contact, but you have sideways action. So what do? You usually drop down to the next time frame, and if you can't find it on the 4 or you can't find it on the 2, it probably wasn't meant to be. So candle closes can both be targets, right, to the upside. Oftentimes when we are approaching a box coming back down, right, it's those candle closes that provide us with our first target, and that is the same to the upside, right? It's typically that last group of candles in that box, the most recent price action, that will provide that solid price target for you. But that is where we can almost always guarantee, unless it's Tesla and Elon's tweeting, that those are going to respond. Now, even if Elon is tweeting, it still will respond. It just might not do it for long. So candle, even 24-hour candle closes. The first green candle to your left through empty space, regardless if it has a box or not, will always be a powerful targeting system. It is how I find the majority of my 24-hour targets that do not have necessarily strong boxes above me. Candle closes, or let's put it this way, a green candle, the bottom open price is where I'm looking for price to hit, especially if there is no empty space or if there is no structure in between me where I'm taking that trade and where that box or candle closes. This is the same thing for red candles, right? So while I kind of left out this, that red candle right there establishes some point of control, and that would be responded to. How you respond to that level will dictate where you go from there. So when we're looking at a box, we are looking for points of contact. If you fail to see that, and what I'm going to do here in just a second is I'm going to take some of your guys' request. I want you guys to just throw tickers out there. I swear to God, if any of you throw, actually, you know what? I'm not going to say anything at all, because if you do throw a bad one out, I'm going to show you exactly why I think it's bad, which will probably be a good. It's good that it's bad. All right. So I was about to say, if you post biopharmaceutical stocks in here, I'm going to lose it. But BABA's a great example, right? It's something that has situationally shown us that it has good structure and then sometimes loses it. But we'll take a look just a second. And what we're going to do is we're going to identify these boxes, right? And then we're going to establish what makes that a box. Where is the points of contact? Or Maybe this is sloppy and it doesn't make sense, so it's not usable. Okay, so give me just a moment. All right, this candle is typically bearish, right? It does not close in. Okay, yeah, so this is a great example of what I'm talking about. I think this is called a hangman or something like that. That red candle right here, that's a bearish candle, right? This is an extremely bearish candle, right? You go to any fucking candlestick book and they're telling you, boy, you better go short. Well, how did that work out, right? Next day you gap up, you don't go anywhere. Next day sellers try to make one last stand, you don't lose the low. The next day you open up, you wick, you touch them, you give them a little touch, you do, right? Engulf. Now, what matters to me in this is that the candles closed flat up against the same area that sellers dejected or rejected. Same thing. Now, when it breaks that 50% mark or moves over the wicks of those highs inside of that box, now I can start looking up towards the top. But this is one of the reasons why I, again, do not pay attention to these candlesticks and their names. Because regardless of what that's supposed to tell me, all I see is a potential retest of the top of that box. And what that becomes is likely short-term structure, and you're off. Here we can see that buyers refuse to let the candle close below that mark. This is where many people get caught going short and lose. And this brings up a great point. I do not, that's a lot of tickers, dude. I do not short floors 9 times out of 10, unless I went up for the 3rd time and rejected. Maybe, right? Maybe I might take it there because I'm expecting that box to break. But that's still speculative, and I still don't have confirmation. All right. We're going to go ahead and break off now. And we're going to change our screen. Give me just a second to do that. Or else. Ooh-wee. All right, there we go. It's the bucks. All right, this should change the stream for everybody. Let me change it on the OBS. Yes, you guys are going to have homework. Yay. You can't let your kids do it either. You have to do it. Few seconds, just rearranging here. Ah, look at that. Beautiful. Textbook, actually. Whoa. All right, everybody see the screen now? If you're answering this and it's 2 years from now in 2026, we are not live. That's a little joke for the future. I'm so ahead of my game telling jokes in the future, dude. Oh my God. All right, cool. So what we're going to do here is we're going to establish what the fuck is a box, right? It's going to hit, dude. It's going to hit. All right, so first things first, I already got a box. And this is a great example of something consolidating or waiting, right? It's waiting. This is, goddamn. This is actually probably why I love teaching as much as I do. Because when you're not full of shit, that really helps. But it also just shows, it's once you get the story, it's awesome, right? Being able to describe what the fuck the story is here, and it's clear. The more you look at these charts, the more that you study these boxes, the clearer the story will become. And I think a lot of you guys, if you can get to the point where you can absolutely, like, was that not a clear earnings setup? Absolutely was. This is going to be great. So first things first, right? Now, by going down to the 4-hour, right, I'm going to be able to work. But we usually start on the 24. So we can come to a couple of clear conclusions here. And we'll start with this box right here, right? The top, green candle. Now you might be asking, but what about points of contact? That's enough. This is not, right? That's not enough. Now, what's the issue here, folks? What's the issue down here? I can't find a floor. I know it's a consolidation level, but I can't find the floor. Let me give you some advice. Go with the bottom open green candle on whatever the bottom of that box is. That's generally going to be your first best bet. But here's the deal. It's not over there, and we don't settle for less, right? We don't settle for just accepting that as it is. We investigate further. Now, starting to become a little bit clear, right? A little bit clear. Now, you did wick down, you did punch down. This actually is the construction of multiple boxes. One box that you punch straight out of, punch down. You did make a new low because it's outside of the candle closes. You reconsolidated again and then popped out. Now, in this case, in the 4-hour, if you're looking at the most recent price action, it would change the gear and now you're focused on this. But one thing that I'm seeing, and this is good or bad, right? One thing that I'm seeing is just a real lack of structure, or not a lack of structure. There's plenty of that, but the volume, it seems like it's very choppy. Meaning you can kind of see that the candlesticks are just almost moves robotically. But what I'm going to do here is I can start to see that the candles are closing at particular marks, like the top or the first red candle here across the board, or here on the green candle open on the lowest part of this box. So I can establish the wick and the candle body as the floor. Now this is a little, again, not super great, but let's go to the 2-hour. Now we're starting to find some resolution, right? Now I can kind of set this down right on the top of these candle closes. And as I move across, I can see for the most part, this is where we're holding. At the bottom, from what I drew on the 4-hour, that's still relevant. This is starting to take shape as my box. This takes less than 5 minutes to go from the 24-hour down. We're solving problems, but we're looking for this. We found it. We're done. The 1-hour is going to contain, and this is where I usually tell you guys that there's a preferred time frame, right? This offers the clearest form, right? The most clarity. Why? Because I'm finding what I'm looking for. Points of contact. Let's talk about it. Candle close, red. 1. Wick. 2. Retest. Validating. Obviously doesn't matter, but there. Now this drops down, pops back up, establishes the top, pops back down, establishes the bottom, and your box is born, right? The floor is still very clear. That is our box. 1, 2, 1, 2, 3, and we're moving. Is this a shitty box on the 24-hour? You betcha. It's a terrible fucking box, right? Now, consolidation is just, it is what it is, right? It shows that a break of tension is coming soon on stocks that, I mean, you could go look at this thing and it's probably similar to Tesla, very cyclical, right? Consolidation, move, right? Expansion, contraction, expansion, contraction, and it rinses and repeats. It seems like actually this might make for something that could be added to your watch list, because it seems like it behaves like that, period. It does seem like it's a little bit slow, but in the past couple of years, it seems like once it breaks out of its range, it does move. Now, I definitely wouldn't hop on it now, right? Because it already did it. So does it not matter as much of the candle close, but just points of contact? So typically, yes, the points of contact are going to be important. Candle closes show control. So if that's preferred, I want to see that. And that's typically going to be, right. Yeah, there you go. AB, look at that. Look at that. And I don't know how long post-it notes last on y'all's desk, but I couldn't write that on a post-it note, but I would definitely write it down as a like all of our phones. If you have an Apple phone, or fuck, if, I'm pretty sure Google does it too. If you hold the thing on the right side, tell Siri earnings on. I need you to remind me on Friday or Thursday, August 22nd, that in Mondongo. You're gonna hear that alert and be like, Mondongo, what the fuck? But I got an alert on for earnings, right? How did it move? What did it do going into earnings? So, on that stock, would you look for candlesticks? Would you look for a candlestick shows it's about to go back up? I think in this case, right, we have to pay attention to what actually happened here, right? There was a box, and you tried to go and consolidate or to break it, but earnings was coming soon, right? When you got to cost basis, you were about, I don't know, a month too early. So I mean, guys, this is, if you see some shit like this going into earnings, I mean, I can't tell you how many earnings I could looked yeah, ridiculous amount. If it looks like this, and it moves like this, and this is actually, this is kind of a little side lesson here. I'm not somebody who's scared to take earnings. I think most of you guys know that. I'm scared to take it if it doesn't look good, but if it looks good, I'm a fucking, I'm a slap the dog shit out of that. Excuse my professional technical speaking, but with this setup, you have that consolidation, the punchback, and the empty space. And this is, again, one of the first times I'm showing a chart and mentioning it at the same time. So for those of you guys who are watching back and or now, that is empty space. Don't overcomplicate it. It is what it is. It is where price falls rapidly without creating structure. It rushes. This price is typically, oh, you're definitely overthinking everything. I think that once you have the skills here, it's really less. Less is more. Come to simple conclusions. Draw simple lines in the sand. This is up. This is down. This is in a box. I don't trade it. Simplicity. We have and are engaged in a complicated process of trying to acquire money, but we can make it simpler. A lot of the times it's just your unwillingness to stop trading and to look around and look at the environment that you're trading in. Look at all the other traders and what they're experiencing. Like, we're in range, right? And this last couple of weeks for a lot of people have been a terrible couple of weeks. But you know what I can do is show you why. Ugh, right? You've gotten 2 breakout days. Ugh. Ugh. It's not a mystery. It's math. Like, it's just, you're stuck in between 2 prices that nobody wants to sell and nobody wants to buy. And until we have a catalyst or we have enough volume accumulated to make that decision, you're going to wake up one morning, and if it goes down, it's going to say Trump did some dumb shit, or, it's going to be tariff related, anything, right? I don't really care what it is or why it is, but that's when the movement will resume. But what are we doing right now? What do they know right now? They know what's going to happen. They know what the move is going to be. They know what Trump is likely going to change his position on, because there are people in the White House that very much make lots of money by just simply saying what is happening, right? Who knew that 7 words or 2 sentences or a paragraph could be worth $1 million? You don't think an institution or the CEO of BlackRock has his homeboys up in that shit? Absolutely. We know. They know. I don't know always how they know, but we know that they know. I know a big move is coming. I know that there is a article that will come out when we reach here. I don't know what it's going to be. I don't know what it's going to say, but I know there will be one. I know that when this is moved, it'll likely be rapid and it will cause panic, right? So, same thing. I could see a headline right here too. See this? I'll draw it right now. That's a headline. That's a wake up. Markets responded to some bullshit, and you go and you hit 607. But what are we doing right now? Building up for it. And this is where we remain patient. But anyway, back to what I was saying. With Mondongo, right? This is a 9.8 out of 10. I mean, it really, I shouldn't even take that 2.2 away. I mean, it is perfect. You have empty space above. You have your area of consolidation. You consolidate going into earnings. If that's not a sign, because typically going into earnings, I don't like when stocks already have moved. It makes me feel like it's already been priced in. And what is more likely going to happen is you're going to go sideways after that earnings. And I have no idea. I just say Mondongo because it's fun. If anybody's wondering why I'm pronouncing it wrong, this is just a choice. It's a choice that I make. Is it not funner? Say it out loud. Say it right now. Say Mondongo. It's a good time. All right. So you consolidate going into earnings. The volume is at the 50% mark. With one simple move, one reaction to news, that volume is quickly distributed, and you don't have anything to stop price until you move up into this floor. And notice what we can't close up against. Yeah, we're not going to say that one. Made that mistake in middle school. 232.50, right? That was a floor that you tried to go up, but you filled the most recent empty space and you did it rapidly. And what did you do by moving up so quickly? You created a gap, but you also created empty space. So you have it both to the up and the downside. All right, let's take a look at some of these stocks though, that you guys wanted me to take a look at, and we're gonna see if we can't find something high quality or if we're gonna call it shit. That's shit. All right. No, I was kidding. So let me put it this way. There are times, if you guys don't remember Jorge, I can't remember if you chickened out on this one. I'm not roasting you, but I remember this was back when Jorge was still on the grind. He was still trying to learn. I believe we talked about a punt, or maybe you did catch it with us. I think you pointed it out to me. For some reason, I feel like it was you. But regardless of that, this is an area on the 24-hour chart that I could actually say, you know what? I can see where price is controlled here. I can see where it's kind of being controlled here. Price is holding that. It's just holding, right? And that bottom green candle that reaches the lowest establishes that for me. Right? It's not super clean. It's not, but it's a clean enough. Now let's lay lines down so you can see my logic here. I'm always looking at the top of the box that the red candle closes, period. Let me say that again. At the top of the box, I'm always looking at the red candle closes. That's usually going to establish where resistance is. So even if it is just as tiny as this box right here, I'm going with that red candle, just like I'm going to go with the green one on the floor. Okay? But the box that you see in front of you, right, is, or was rather, clean enough that I could make a prediction that if you had popped up, you should not break down. Price action is price action. And lo and behold, you bounce, or you break down, you punch down. Now, luckily, right, and this is, again, another great sign. Remember what I told you about closing underneath? That's a candle close underneath. What do you do the next day? You gap down, right? Now, gapping down, you move into some structure, but after that, I'm not trying, guys. Like, if I miss it, it's okay. You know, like if I miss it because I couldn't see it, that's okay. If I want to try to chart it like this but what is that telling me now? You know, I could try to go and find floors by exploring lower time frames. That could be useful and that could help, right? Something like that clears a floor. So that's what needs to be recovered. But then you see this type of shit and it's like the only thing I can really do is assume that's a range. Well, it is, because you can't close on top of it. And you see 1, 2, 3 rejections. So it's a range, not a box, but it is a range. So the gap fill would be quote unquote cost basis or the median of that range, and perhaps you could punch through it. But what hot dog doo-doo water, right? You can see that comparatively to this, look over here to your left. That's a clean box. That's clean, right? I can see my points of contact. My candle closes, but it's still a little ugly. So Baba and JD and Baidu, right? Because they are tracking overnight and we don't have access to those markets, we can find, I mean, I didn't even see this, but it looks like it worked, right? You recovered your floor, you gapped up today, you gapped up, so then you moved up. But Chinese stocks are tough. They are tough and they're situational. I mean, I might trade them twice a year and call it good. There's no need to, you know, go harder where it's unneeded. So, all right. So we'll take a couple more, and then I'm gonna go grab. I for some reason forgot my water. But we're at an hour exactly of class, so I want to give you guys a chance to grab some water, rub your eyes. 2-second break, no mercy. Not 5-minute recess, but you get like a 30-second powwow cigarette break. I don't know. All right. So let's take a look at another one. See if we can't find something more suitable. So ACHR. So on the 24-hour, I can tell you this now, right? Unless you're going down here. So I'm about to have a moment. Hold on. I feel like fucking Jimmy Neutron right now. I'm reeling it in. Let's look at this one. The answers are always, I promise, always on the chart. Take a look. What are we fighting for? That sounded really inspirational, but what are we trying to break? This is not Mulan. That is just your previous wall. What is above you? Not much. Not much. So either you're aiming for the high of 1282, the candle closed there, and the 50% mark of that wick at 1365, or the actual high. That's really all you got. You don't really have much of a choice. Or you're going down into a lower time frame to try to find something, right? And this is typically where you can handle that. I ain't doing it, right? I don't want to trade something that I have to. But here I can see that above 1162, you have a retest of 1263 established by the candle closes and wicks right here on the floor, as well as the retest. So I can come to some conclusion, kind of get an idea of what's happening here on a lower time frame. I can also see very clearly that on the 2-hour time frame, I've established a channel control, right? But when I look at what's above and when I look at what's below, if you asked me right now, gun to my head, which part of where are you taking a trade on this chart? You have to, right? My trade would begin here, under, right? Why would I be targeting down here and not up there? It's a simple answer. It doesn't make any fucking sense. And I'm really tired and have been tired and got real tired real quick of trying to make sense of things that don't make sense, right? Or require more work than is necessary. Now, it's not hopeless to the upside. There's something there. But this to the downside has everything I want and need. And if I flip it upside down and I didn't tell you, you would just assume the same, right? Perhaps you bounce, perhaps you move up and grab that floor, and that's a punchback through the empty space, right? Into that floor there. But let's go over what makes that a box. So it's a weird one, but it is one, right? Top here, you can see how much respect price has for that candle. And this is, again, another great example of your open candle. I could trade better than most people do using the 30-minute just looking at the 24-hour chart. Like if I'm already in a trade, I can look at the 24-hour chart and know where price will hit. It is almost always going to be the tops and the bottoms of 24-hour candles. Almost always. In fact, when I first figured that out, I think it took me 2 weeks to come back down from that high. I was smoking on daily candles, 24-hour candlesticks. It was like, no way. Yes way. It's not that complicated. It is mostly focused, but if you notice, the candle open here is exactly where that wick comes off, right? That's where we end up pulling back. But regardless, right now, when I look at this, I notice that there's a whole lot of candle closes on the floor there. This might change as I move down to lower time frames, but on the 24-hour, every time frame might look different. Now, typically when they all look different, I typically back off because that means that something's fucky, right? If I go to the 4-hour, see what I mean? Now it's intraday price action that would ultimately determine the outcome of that trade, or a 4-hour candle close, or the end of day would have to be underneath that. But that is my floor, and I can identify that on the 4-hour. But on the 24-hour, right, I would say that this is kind of a mid-grade kind of box, right? It's not super clean. It does have that consolidation, and it does very much establish the 50% mark right there as its potential breakdown. But as far as, and not only that, one of my favorite things about my strategy is that typically when you draw these boxes, especially the ones that come off of the tops, that top right there will typically line up perfectly with your resistance, right? Give or take. That's where your cost basis is lined up at. So it makes it even easier to gain confirmation in some ways, right? Now, one of the issues with this chart, when you did finally leave, what did you have above you? This is one of the things that I do to avoid false breakouts, is I don't take shit that has structure above it until I'm absolutely certain. So like, that's not necessarily something I would have taken. You know, I think more or less from here to there would have been a good play. But let's keep moving forward. I want to try to find more better ones. More better. So, yeah, I mean, and here's, before I go any further into this chart, because of the trajectory that it's currently taking, and I can tell you this right now, the lower time frame is a fucking nightmare. So this is already a higher time frame trade. But let's talk about where I would target Datadog, right? On the 24-hour time frame, above this floor that you're currently fighting for, look at that. Look at it. You went up to a resistance to a 24-hour floor. You did not break it, and so you pulled back. What do you pull back for? More supplies, right? Because that's where the volume is at. So you pull back, you bounce, and hopefully you'll consolidate here. If you're able to reclaim that floor, green candle, 130.25. That would be my first target. Now, as I move down into a lower time frame, that may change, right? Slightly, but it wouldn't change that 24-hour. It would just change how I play it. But now we can see that that 130 mark that I'm talking about is basically cost basis. So as of right now, right, looking at Datadog, boxes underneath, relatively clear. But the first target would be that green candle directly up above you through the empty space. And the only thing that's stopping you is this stupid motherfucking floor. So what I would be looking for here, right? Well, let's back off that actually. Let's go ahead and just look at what's underneath us, right? So right off the rip, 24-hour time frame, candle close, candle wick, red candle, there it is, right? And then look at what you push off of. Push right off of that. Now, we got a problem here. My floor sucks. All I can see is a candle close and a wick. It's enough, but it's not great. What is it hanging on to? Let's answer that question by dropping a wick. Bam. It's that wick. Let's go look at the 4-hour. Ah. Right? Now we can start to see Now here's a weird phenomenon. Can anybody tell me what just happened when I went from the 24-hour to the 4-hour? This is again requiring more work than that's what's necessary. But what happened here? What changes between the 24-hour where we're all consolidated up and the 4-hour here? You no longer have a 24-hour box that is uh, cohesive with the 4-hour time frame. The box falls apart, and not it's still consolidation, but what's happening here? All of a sudden, we have individual structures. A box, right? Separating us from what? Tops, bottoms, right? Bottom there. Now, this is fucky, right? And I'm not going to take that away from this. This is a fucky stock. It's a fucky chart, right? It didn't do anything out of the norm. It did exactly what it's supposed to do. It came back down. Well, actually, yeah, no, I stand by exactly what the fuck I just said. It's that floor at 113.67 because that was a box. Again, this is a shitty stock. So if this feels like it's difficult to interpret, it's testing me. But there's a story here, and typically my goal is to be able to try to describe that. So what happens? You have an area, you hit a target, you consolidate, you drop, you go sideways a little bit more, holding up over this price. You reach down, you touch cost basis, you grab the volume out of it. The consolidation area that you made here is punched through by an overnight gap. You gap up above those candle closes, price moves up to touch the next box above, but gets stuck because nobody wants to buy and nobody wants to sell. So you get stuck in between the two ranges. But eventually, because sellers can't do their job on that final third wick down, right? That third one, two, well, I guess maybe fourth, but you wick down, unable to close anywhere, and you close back up, pressure rises, you push back up against cost basis, and lo and behold, you're up, right? So all of that would have to be solved. So you'd need to drop down below 119.05. You would need to drop down below 118.12, and then you would start being able to call for a trigger. Trigger down, you got a gap fill, but that would only lead you down to around the 112 area where you have another empty or gap, but that would only be triggered by a 112.26. I think cost basis is where the most volume is, where buyers and sellers are fighting each other. So does it matter if you have a box above and below, if it's the one that's more clear that dictates? So here's how I'm interpreting. This is what I was just getting to. On the 24-hour, this is a box, right? But let's actually think about what would happen here. So if I punch below this box, what am I doing? Right? Let's remember this price of 116.26. What would that do? If that was the box, right? So let's take away the... So if that's my 24-hour cost basis, and I drop down underneath 118 and break 117, and that triggers a new low, and that breaks down, right? So 24-hour candle closes, you've already triggered a box. This drives you down into your gap and into the next low. So one in the other, or as above, so below. So if you break that, you're still breaking the same thing, right? They could be played. So if a 24-hour candle closed underneath 116, yes, right? Because it's still triggering the same thing on the 4-hour. Now, the question here is, would I trade this? Probably not. Datadog is something that I really generally only play up. I'm not much of a Datadog down. Datadog's downside is short-lived when it is fast and choppy when it isn't. right? But its upside, this is getting to know a stock. You know, if you know you got a horse that doesn't like to ride in the rain, and you go and you ride in the rain and it fucking bucks you off, that's your fault, right? This motherfucker likes to go up. And when it does go up, it goes up. So if I had a choice between down or up, I would wait for that candle recovery above where you're consolidating right now. Make sure 123 is grabbed hold of, and I would grab the fucking reins and ride 130.50. Right. And again, I'm a little ahead of myself because we're trying to establish boxes, right? Just establish candle closes, stuff like that. XYZ. I know a lot of you guys are looking at this one. So this one is on its way, right? 24-hour and 4-hour can agree that what we're looking at ahead of us is, in fact, a box. XYZ moving as slow as it does, right? It's taking its sweet ass time moving through this, but ultimately above $67, this box is clean, right? Now, I'm going with always the bottom green candle. Even if that means that we don't fully come into contact with that, you'll notice that if I go over here to my left, after drawing a line here, that's what you struggle against. Why do I pick that area for the box? Because that's where consolidation is happening, period. Like it starts with the first up, down, and that establishes their range. So I'm putting the box where price is going sideways in between two prices. And in this case, we have perfect points of contact, right? You have here, here, and here. Here's your floor. Your wick comes very close, grazes, but finally on that third breakdown, because you curl up and hit it for the third time, you end up falling. How many touches are needed to make the box? 3 realistically is a general standard rule of thumb. If you have a box that is only in second or third rotation, or our first or second rotation, you can start looking. So my favorite, let me just say it this way. My favorite scenario is where a stock already goes for the third, right? And is lined up to make a third on the opposite side of that box. So in this case, if I saw this rejection, I might be eyeballing a straightforward break of the floor. If it's not always if it's not this is where waves, Cruzon. This is where waves come in. While this does not count as a perfect tap, it does count as your second wave. Okay, so waves are, not every wave hits the same mark on the shore. In this case, it's the wave down to where buyers control the price, and you're extracting that volume and using it to go up, and it's unable to do anything. And so by virtue, you are by proxy, you are pulling out that volume that exists on the floor, making it weaker. So with a box like that, I mean, the box is perfect. The box is well constructed. Again, we're moving through it a little bit like pond water, but I fully expect for this thing to move up and out. There's another really good example of another box right here. Points of contact, the bottom floor marked out. You can see by the green candle, the wick, 1, 2, 1, 2, 3, right? Let's see what else. What else do we got here? I am giving you guys homework. So now I do not have the time to go. I mean, during the day, I'll go and look through every single one of you guys' charts. And I would appreciate it if everybody put it in the homework channel that is above. Last time we had them mixed up all over the place. But I'm not going to be able to give everybody a full breakdown on everything. My goal is to see where you guys are at in terms of establishing boxes, and the ones who don't, if I don't call your name or I don't say anything about your chart, you're doing okay. Okay, so I'll brush through them and I'll point out the ones that need to put the most work in because we still have a lot of class left. All right, let's see. So Tesla, or we'll do TSLL. So this was another really good example, right? And on the 24-hour, right, I had to go with, and it's weird because the 24-hour to the weekly doesn't necessarily translate to the cleanest box in the world, right? If and you know, for me, I'm gonna put the box there, right? Even if it's, can we? Oh, there we go. So like right here, the wick, the candle, the bottom, the cost basis, right? But on the 24-hour, it makes a whole hell of a lot more sense, right? We drag it down, wick, candle, that's our floor, right? And this is a large box that should translate to that higher time frame. Anybody take that, by the way? End of day? I took that at the end of the day. I don't know, fucking might end up getting 12:55 tomorrow. Um, so this is a large, I'm going to put it this way. This is a large box that as you move into the lower time frames, you would start to have to acknowledge the box is within itself, right? Because you would have known that it had, in order to get to cost basis on the larger box, you had to punch through a fucking 4-hour box to move to the lows. Yeah, Sparkles, you brought it up. So as far as points of contact are concerned, this is perfect, right? 1, 2, right? Here you have, you know, typically look at the top here, but we could literally say that in one range, you tapped it 3 times. But if we're looking at it 1, 2, 1, 2, and then that third and final one is the one that brings us up, right? And then you go up, you fill your empty space. And this is just, again, go look at that MDB chart, guys. Let's look at them side by side. This is just really good for the brain. Good fucking setups, right? Clear, empty space. What does price do? How does it behave when it's in that range, right? Now, 50% of the way there, TSLL sat sideways. And this is, I think, where we ended up. Some of you guys got Tesla, some of you guys got TSLL. This is actually where we came to the conclusion that Tesla either consolidates, and this is just something that I think everybody should know anyway, but like Tesla will go sideways for 7 to 9 days, and it will break out. And if it doesn't, it will continue. It will. So like as a standard rule of thumb, it is actually 1, 2, 3, 4, 5, 6, 7, 8, 9, and then you're moving, right? So you can say 9 to 10 maybe, but like you're moving on the 10th day, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, right? And you fill up the rest of that empty space. And this is something that I went back and I looked at. If you do not if you consolidate more, right? Then 8 or 9 days, you're going to consolidate for a month. And this is, again, go please, you know, that's something that you go take your time and look at. It's got me kind of like, I'm intrigued. I'm about to just set like a period alarm for this thing, for a cycle, because, you know, it kind of perfect. But that being said, this is actually a really good example of my strategy in itself, as far as, you know, again, offering signals. You look at what's happening and you move down to the 4-hour. Now, in the 24-hour, we can start to see hints of sideways action, right? That's a period. Drawing a box around that is not something that I necessarily want to do. How do I know if one big box or smaller boxes on top of each other? You cannot build a big box without smaller boxes inside of it. So in between 12 and 6, that is an area where price consolidates. But if we were to go and map this out one by one, there was a box there and you popped up. You built a box there and you popped down and you punched down. And then you popped up and you retested that empty space and you came back down. And you bounced and that created a range, and then you had to build a box around the top, which this was cost basis, boom, and then you take off, right? But what that did is it made a large area of consolidation. On the 24-hour time frame, I would be using 24-hour and weekly, I'd be using that as a signal for a longer trend reversal for Tesla. But for a shorter term play, because again, this was a perfect, I mean, we nabbed this one pretty well, but this was a perfect punch down, right? Lower time frame punch down. And then you look at what realistically is in between you and your targets, right? You see the bounce off of the top. Again, it will always respond, but what it recovered wasn't enough to actually give it another break up. There's a box underneath you, right? So the market is a fractal, right? It's a fractal system. What is happening above translates to below. What happens below directly translates above. But it also means that if the 24-hour chart shows a large range, large range between two large, prices, that's where you're going to see the lower time frame, right? That's where you would have to, in order to play even two cost bases, would have to acknowledge that if you're day trading it, because if you were swing trading Tesla or TSLL, you would take it down, say here, right, through this box, and you would take it to the top of this box, let your runners run, and so on and so forth. But you would have had to, and we did, use this box underneath us and the top of it, right? We flushed right through 11. We ended up flushing directly through 1027. And then we ended up going and making that new low of 885 before we bounced, recovered the floor, and as you can see, moving back up and out outside of that area. But this is, so I'm playing the 24-hour chart and I want Tesla to go to its cost basis. How do I make that happen? Well, I need the top of that to break, but as I move down into lower time frames, I see that a box on a lower time frame is realistically the trigger that's going to give me the target that I'm looking for. So, you can't even see the boxes that are on the 10-minute or the 30-minute, but they're there and they do have an impact. Because if you punch through a 10-minute box and it gives you a 10-minute high, it leads you up to that daily 24-hour floor, that's still important. So don't confuse yourself. I mean, first of all, most of you guys shouldn't even be trading in range. But second of all, there's nothing definitive on TSLL until we get outside of $12, and ultimately until we actually recover a floor, which in the most recent price action would be $12.50. But the way a 24-hour chart impacts me and the way a 4-hour chart impacts me could be vastly different, or even just lower time frames. Lower time frames are typically rooted in shorter time frame trades, and higher time frames are rooted in longer time frame trades. So when you look at Tesla, or if you look at a higher time frame and you say, well, I want Tesla below cost basis, in order for you to establish whether it was going to make it to cost basis at all, you would still have to have had watched price action on a lower time frame move down, which would then obviously made you see this 4-hour box, which would then instruct you on how exactly that would happen, right? And not every chart is going to be like this. I'll take you just, again, it's just on my mind, but like when we traded Schwab, right, that was not the case. Right? This was just a box. That was just a box. I didn't need to go to lower time frames to really kind of establish what was going on here. Everything was clear. In fact, this is a stock that gets infinitely difficult or more difficult the more that you look at lower time frames. This one is just, it just is what it is. And it's clean. It's clean. You want every chart that you look at to look as clean as this one does in price action and in consolidation. All right. So again, marking out a couple of things while we're on this chart, right? As far as the box is concerned, points of contact at the top, and you're right. It did go and make a new high. And now the bottom. Now I can see why some people would be confused, why I'm going off of the wicks. I do see points of contact, and I might be wrong. But what I'm going to show you guys here is how to correct myself. How do I know if I'm wrong? I'm going to go to the 4-hour, and I'm going to see if that price level that I just marked out holds any relevance. It sure does, right? The candle closes are still up there, which might be something to pay attention to. And funny enough, while I'm looking at it, I can tell that you actually punched down. So that is in fact, you reached down, you popped down, you consolidated further, and then inevitably you ended up breaking it. As you broke it, you tried to grab hold of it and panicked, and you slipped and fell. So, um, yes. Okay. For tonight, for your homework. Okay. Everybody's listening. Thumbs up in the chat. Everybody's listening. Nobody's on their phone. Jorge, let that thing go, dude. It's gonna fall off. I gotta quit picking on Jorge. That's just because I love Jorge. See, Jorge ain't saying anything. Dude. That's crazy. He's just sitting. He's feeling like a senior in high school right now. He's just sitting there vibing. All right, cool. Your homework for tonight is to go find. We'll go ahead and say, I want you to find the good. I don't want you going and looking for bad charts, right? I want you to find a solid area of consolidation. I don't care if it's already happened. I just want you to go and find the cleanest shit that you can find. And I want you to mark out the points of contact within the box. I want you to, let's just go ahead and do this. So, Alex, if you want to type this or clip this, we're looking from March of this year, okay, beginning of March till now, to find and establish boxes. March 1st to now. So don't go past March, but chart all the boxes that you can find in between. Does that make sense to everybody? So from March 1st, on whatever chart that you find, I want you to find delicious, clear, no bullshit, 24, that's what I was just going to say, 24-hour time frame first. Any ticker, I don't care what it is. I want to see let's just say this. I want you to go out there and find a good play. But I also I want you to find a good chart that has consolidation that offers that, right? So just solid structure, no Chinese stocks. They're probably not going to work. All right. So we're going to go ahead and take a break from that. We're going to do more, right? I'm going to test you guys here for a second. We're going to do more. Identifying areas of consolidation. That's literally all we do. But again, I want you to go through. I want you to identify these areas of consolidation and mark them out. All right. It's got to be the most recent. So from March 1st to now, and nobody can do Schwab. It's over with. Can't use Schwab or Mondongo. Mondongo. All right. We're really quickly going to turn our attention back to the thing, and we'll do about 30 more minutes here. Yeah, I said I was going to go get water actually at an hour mark, and then I talked for 33 more minutes. You guys see how that works? All right, we're going to switch these back. I want everybody to go and grab water, grab whatever, and we'll finish this up really quickly. Changing the windows. Yeah. You said MT. It's a wait. Hold on. MTPLF. Yeah, dude, that's the wildest shit I've ever seen in my life. Terrible. All right, go grab your waters. Put ice in your cup. Grab a beer, whatever. I'll be back. Yeah, you're feeling dumb after looking at that. See, that's the kind of thing, man, that like, when I'm on TikTok, I get a lot of requests that sometimes I feel like the best thing I could do for them is tell them to piss off. Not like literally like get out of here, but like don't if no, like that's trash. And I maybe I just don't have a big enough ego to be able to just say to somebody, like that's trash. Because there's been things that don't make sense to me that end up working out for that person, or like I've explained the biopharmaceutical, game plan. Excuse me. Where you go look at the biopharmaceutical calendar, you correlate that to where price is moving in. If you see volume rising, like there's a way, right? Like you can figure that there's probably like a specialized strategy. My strategy in some ways, obviously grabbing floors, like price, that remains the same. But 9 times out of 10, that shit doesn't do anything. So it's like I feel bad, but I also, even in the Discord, it's like I wonder why, knowing what we know about how price moves, right? Knowing what we know about how a clean setup performs for us, right? Or yeah, what a clean setup does for us and how that pays out, right? You look at MDB, you look at some of these other, Schwab, you look at Mara, you look at ANF, you look at all these different really, really successful trades that we've had. And they all have pretty much the same thing in common. And those are the trades that everybody wants. But then they pull up some shit that looks, god awful. And people have various reasons for bringing things up, news, or somebody else said something, or flow. And those are good reasons. That there's good reasons to maybe go and look at that stock. But if it just looks terrible, and especially if the risk is not lined, if it looks bad and it has bad contracts and you're still taking it, the fuck. So, all right. Now this is such an important part of this workshop. And it's something that I think we forget about, or a lot of people forget about. And we're going to talk about this as well, right? So when we are looking at candle closes, right, we are looking for, and I think there's just really simply like a way to think about it this way, right? If the price of something, previously, like 2 or 3 years ago, of whatever, could be a fucking pack of Pokemon cards. If it was selling for a certain price at $15 a pack, but then popularity started to dwindle and it was selling for $9 a pack, right? Um, if fucking, I don't know, Joe Rogan, shit out a pack of Pokemon cards and sold them, and, all of a sudden, whoever, I don't know, I'm just making shit up right now, but like, if they ended up bringing that popularity back, and then all of a sudden that pack of Pokemon cards that, you got for that previous price reaches that floor again, it's an encouragement, right? Or it's saying that the price of that I bought it at previously, where price ended up pulling back from that or decreasing from that, has returned and interest is rising. This is typically a sign for people who bought at that level previously and people who missed it to buy again, right? So in order for us to grab hold of anything, I don't care about the wicks. I care about where price has settled and what has been lost. And we're gonna actually probably close with candle close for new high. Excuse me, I got a bug in my chest right now. we're going to do candle close new highs because we're going to look at the chart. And then tomorrow we'll open up with the passing the baton for sellers. But in these examples, and I was using a charting platform that I really didn't like at that time, but it's still, and this is, looking at both left and right extended hours. And yes, I know the box in here is wrong. But what's more important to me is the floor that I'm able to establish here, right? By candle closes, I'm not able to find a floor there. That's the same candle that we end up closing here, right? But with a candle close, we are looking for the edge to grab hold of, or the floor of a box, or the floor of just somewhere where we've consolidated, which is a box. But it could just be a floor where you've bounced off continuously, or it could just be pulling yourself up above and holding where sellers control the price, right? This does not guarantee, Jesse, we will get there. I promise. I will not leave any single one of you behind. Everybody, we're going to, don't worry, everybody. If you feel like I'm moving fast, this is day 2. Well, I figured I'm just going to show you. Yeah, I'm just going to show you. All the slides I got for is from a new class, but get out of here. You're banned. But anyway, this does not promise continuation to the upside. So let's kind of take a look at that. Well, you have no idea how hard it was to actually find this. All right. Okay, so let's close this screen up. Yeah, that's pretty good. Okay. All right, so wow, mailman. Damn, dude, I'm gonna have to put you guys in jail for real. Alrighty. So again, with remember what we just looked at on our slide. We are looking to grab hold in order to find and at least in terms of the box, if you grab hold of the floor of a box, you're not promised a new high until cost basis is broken, right? But in this example here, where we're looking at Tesla, right? We can look above us and we can see that this green candle here is our floor. We can also see that in between us and that floor, looks like there's some remaining empty space and some consolidation via 1, 2, 3, 4, 5 candles, right? So we want that. And I think if you were in my Discord when this happened, you probably got that. But we need to be able to know that price is going to be able to continue to the upside. And in this case, there is nothing but empty space above you, so we're banking on that to get filled up. So if price can move up, and this is simple, right? And in order for long-term continuation, I'm going to show you another example in here that's going to be, Mondongo actually is still perfect example. But this is what grabbing hold, right? This is actually a full animation of what that looks like. You're pulling up, you feel the empty space, but you actually grab it, right? You grab the floor. That means that when price pulls back, your fingers or price grips onto price and bounces. It pulls itself back up. And this is what I mean by candle closes and looking for the floor above us to be grabbed in order to see continuation to the upside. And not only that, but to establish whether or not price is going to continue or to hold. Because if Tesla was to lose that floor, yuck, what happens? Dumpy. And that was an incredibly important floor. So when we're looking at 24-hour candle moves, this also stands, right, in the same sense for the most recent price action. So in this box in Tesla, right, we consolidated, and I think that was again 9 days. And then you broke out, right? And you look to your left and all these wicks and all these candle closes, you grab hold of price above you, right? And it ends up being right above that candle close and wick. You held on. So you went up, you hit something, it pulled you back, but you held on and you did not retrace. That shows that price is likely going to continue. So what's in front of you? What is in front of you? Nothing. So price continues moving to the upside. Now your first red candle comes after that big gap up. And do you guys remember what I said that morning? I don't know if you guys remember when we swung. What did I say? I said, one of the only things that I don't like about this, right, is that it's gapped up to a floor. And one of the things we're going to go over further in the chapters is that if you gap up under a floor, the ball is in seller's court, so they're going to push you back. If you gap up on a floor, buyers have the ball, and they're going to take it up first. Where it goes from there, that's what we have to determine. If it opens on cost basis on a box, you're typically going to explode. I thought once you move through a box, you don't reuse it. Where am I saying that? And what part, Jesse? Talk to me. What's up? And that floor is where you place your stop at the downside. Yeah, typically that is, yeah, because if I can look at the chart and acknowledge that this is where we fall, what's the right answer there? And determining where I'm at in that trade, do I have 6 months out and am I aiming for way higher? Then that little pullback might be okay depending on what's underneath it. Oh shit, yeah, that really did hit 3. Dude, my price target got slapped on that thing. Now that means that tomorrow, right, if we're able to grab hold of said floor, we could be looking at the same scenario. If we're unable, we might consolidate until that's a possibility. So if you know what it is, it's like, and this is a good metaphorical way to think about it, but like when price moves up and you can't get people to buy, all of a sudden you've got an auction house. Hammer, right? You're fucking buying, you're creating, you're literally creating that volume. And then they always strategically plan on everything for news, and Tesla does it pretty much every 8 or 30 days. That'll go up. And what I can say is that, when I look at things that are clear like this is a point A to point B type trade. The only difference I think in this case would be I always split my empty space, even if it's remaining, in half. And this is typically for risk, but also as like a first target. And I could, verify that by moving down lower. But regardless, whenever price is not accepted by the candle above you, it literally has to build up the volume or build up the interest in people or you're trying to basically hold that stock until people are willing to buy. And when you have enough volume underneath you, that creates the stability and the tension that you need to accomplish that. All right. We'll see what tomorrow brings. I'm curious. That was a sharp increase right there. I thought I've heard you say that. No, you are 100% correct, Jesse. Once you move through a box, it is disposed of, right? So I guess what I'm asking is what box on this has already been used that I'm reusing, right? The only box like it when you okay, so let's look at it this way, right? Let's use this box, and I'm gonna go, I think, wick to wick right there. Yeah, wick to wick right there, because I know if I go to the 4 hour, it's the same thing. It's perfect. So if I go to this box, which held, right? This box, once it's left, is still viable because it was never moved through by, it didn't pop up. But if you had done this number, let's say you had popped up and then punched down and bounced at 255, then whatever was above you, if you'd made empty space, would be like you would still be using the same floor. But what I'm trying to say is we don't reuse boxes for punchbacks, right? We don't reuse them as a for sure. The only for sure thing that I know is that if you were to dip into the box, it would be the top of the box, the same resistance that I would be using to go higher. So if you bounce off cost basis, it's that previous high, as you can see, is where you break out again. And the same thing with the floor. If I was to, let's say, we did punch down, right? Like we did on TSLL. That box and its signal of going down is gone. When the floor gets recovered, what would be my next target? Cost basis. But what does cost basis do, regardless of it still being where volume remains? It's not that 50% mark anymore because the volume has been distributed. So you basically, when you're, it's almost like your price is moving through an area of consolidation and utilizing that volume within it to actually continue moving price down. So that volume and its concentration has changed. And a lot of the times we don't have insight on necessarily where that is quite yet, but it's normally going to be one of the points that I made before. But if you were to punch through that and you did go make a new low and you recovered the floor, like I said, right? That would promise, or at least in these terms, would promise that you would get to at least cost basis. If cost basis was broken or rebroken, then it would just be resistance. Right? So you see how it's not promising new highs. It's just giving you price points to make definitive statements at, which is useful. Don't get me wrong. It's incredibly useful to be, we're still using it. But once you've made that 2 out of it, normally price will build a box here, or it'll build a box here, and that volume will be transmuted and the signals and their prices will change. Okay. So in order for Tesla, this is going to be a perfect example to answer your question just now, right? So let's go to the 4. For Tesla, if I move back up, right? And this is where I get my point to point, right? So step 1 is what we've actually already accomplished. And I wouldn't be surprised. Right on the money, right on the money. So you actually end up bouncing at that floor, right? And so that transmutes, right? That box right there is over with. And so what's really the focus here is the first green candle to our left, but they're the same thing, right? At this point, it would require, I need Tesla tomorrow to gap up above where it just closed, right? If it can do that and get over the same exact green candle high, it will go and touch that floor. Now, here's the deal. When I'm looking at price, I'm always looking at the most recent price action. So while this floor is still very much relevant, and so is this same resistance, right? It's the most recent price action here and here that would be the defining factors for direction on this trade. So what am I saying? I'm saying that if I charted this like this, do you see where empty space ends right there? At cost basis, relevant price action, right? Here, right? Where you go and you retest. That would be, but what are we still using? The same walls, right? And in this case, that, I don't know if it'll close. You try to see my issue with that. And this is where problem solving comes in, being a good problem solver. I'm trying to be a good problem solver right now. So look at me, right? We got a floor here and I'm literally problem solving it right now because this is the most recent price action. I see my floor here, and I see the same floor here. I can see that price bounced off of the floor here, making that kind of irrelevant, right? But what it tries to recover is the green candle to its left. So that would make that and that its own range outside of just because you broke the floor and you reached something below it. So while that is still relevant, it would be above 331 that we could achieve 337 and a move straight up to 340, 385, right? None of this, of course, happening unless we get above this step by step. So far, good. So far, so good, right? We're in a good place right now. But does this make sense to everybody? Am I losing anybody right now? Right? This box was useful when it was punched down below, right? It threw you for a little loop, and that's all right. That happens. You still, wouldn't have taken that trade because it hadn't have broken anyway. But it gives you that signal down. And this can happen. It does happen. Most of the time when you close below cost basis, right? In this case, you did not. That previous day, you gap down below it, and then you bounce up to go grab more sellers, and then you make that move the next day down. So it's, it's just a situation of where you open up on price. It's going to take its time and do what it needs to do to make that move. So now this box is no longer used for specifically a punchback. Its floors and ceilings will still be very relevant, but will typically have always been transformed into the most recent price action. So, does that make sense? Most recent price action is what I'm trying to say. Focus on that first, right? If you did punch through a major box or something like that, then those things are still relevant, but not necessarily triggers for anything. It's just the previous, right? It's just, so, when I dip into a box, or let's just do this really quick. So one thing that stocks do all the time is they'll go up, right? And this is how they stop people out. And just they'll build a box and then they'll pop out. They'll build another box and then they'll pull back. But a lot of the times the pullback will actually lead you to cost basis, which you exploded off of and left empty space. And that's where you'll make good use of your box above, right? You're leaving those orders behind so that way they're there when you're ready to break out. So with Tesla, these price targets, right, are still relevant in the sense where if I dipped into this box, like I'm saying, right here, and then bounced outside, it would be the previous top that I fell in, the sand trap. And this is, I'm getting a little bit of ahead of myself because we still have a whole nother slide to get into. But my foot, right? It's like sand paper. Or I use the metaphor of like a sand trap, right? Or a the fuck is it called? Sinking sand. What's it called? God damn it! Why am I forgetting? Quicksand. What the fuck? I should ban myself. Anyway, quicksand, right? What did I call it? God damn. I know, dude. Really got to question my intelligence right now. Sinking sand. It's fast sand. Sand trap. Sand trap's definitely real because that's golf, but definitely doesn't suck you in. All right. Anyway, back on course. Look at that. That's that neurogone kicking in. All right. If you fall back underneath the same box, it's like quicksand. Almost called it again. It's like quicksand, which means that if you got out of it and then your foot slips back in, right, you better chill out and then bounce, get your foot back outside of it, outside of the top of that trap in order to push yourself back up and out. So if I was, say, I saw something break out consolidate like this, and I wanted to wait for the box to break off the top or off the bottom so I could catch a retest because I want to take this trade up. And so it comes back down, it bounces, it fills its little gap, and then it it immediately responds to cost basis. Candle closes directly at 351. That previous box, right? Well, at that point, it would be the top of that box that would send us higher, right? That's what I would be using. Does that make sense? Fast dirt. All right. Looks like a ultra tiny box for the flush down. You talking about this one? Absolutely. That's actually the first. That's the gap. That's the open. That's actually the first thing that you like when we dumped. You bounce. You always. There's things that you're always going to bounce off of, and you know what those are? Motherfucking 24-hour candle opens. Always. Look what you're tapping right now. It's one of my favorite things about teaching this thing. Is just like once you start to see these things, it just I don't know if this is what autism is, but like that shit gets me pumped. I'm gassed up when I see this shit. I'm like, yeah, lines, candles, coherence, just perfect. Everything does what it's supposed to do. 24-hour candles, especially. Which is, again, an advantage that you guys have over everybody else. I was just looking at the daily chart on somebody else's stream. I was like, man, I don't even know how they're like fucking, doing any of this. So Potter, you drew 3 points of control above the current price action. So with all of that control points up as a resistance. So while all of those control points act as resistance while Tesla attempts to move up, yes. Are you talking about to the upside? So if you're talking about right here, right, those points of control over top, yes, that will act as resistance. It would be now if there are signs, right? There's your sign. If you're able to recover your floor, all right, shit's getting fucking, you're putting sellers in you're putting sellers in a weird position, put buyers in a weird position, which is why I think that we should expect that Tesla likely finds some sort of resistance around the 323 or even just flat out 316, 317 area. You drew 3 above 316. Hold on. Here, the top. One, two, three. You said the. You drew 3 points of control above the current price action. Right. So will all of those control points act as resistance? Yes. So if what I'm interpreting, yeah, the floor here will be resistance. That's the difference. Right. Yes. Okay. Yeah. Sorry, I misinterpreted. Yes. That's resistance. That's resistance. That's resistance. None of these things promise me a new high, except for one after the other breaking. Sorry. Got a little lost in the sauce, you know what I'm saying? All right. So let's look at an example of something that just couldn't. Gio, what do you say? Oh, back on the 2-hour where Tesla reversed, also a box are not enough back on the 2-hour. Sorry. 2-hour right here. No. No. I'm sure somewhere, and this is why I always do top-down analysis, somewhere in here there is box, something box. Now, here's the cool thing, right? Is as you move down, we start to see it's starting to give itself away, right? In terms of what will happen. Here's an hourly box that you created on the floor that we need to go and hit. What's above that box, folks? What's that? Want to hear you say it. What is it? Where is she? Right. It's empty space. It's empty space. That's just that simple. And your floor was your previous resistance. So by achieving this and punching through this, which look, everything motherfucking always bleeds together, my friends. If you punch up, right? That the top of this box was attempting to go and recover the floor above it. So by punching through it, you gain access to that floor, which gives you access to that empty space, which then gives you a 343.15 price target, at least and that's a lower time frame trade, right? That's a lower time frame trade. Can I explain it in JFK voice? Well, empty space. Can't take myself serious when I do that.
Elon's a great guy. He always gives me cigarettes. I love him.
You know what? Fucking Homeland Security agent's gonna watch that 2 years from now, when we all have to report to the military parades in our cities, and I'm going to jail. The brain worm needs empty space. Poor guy. So one could actually say right now. So we're gonna do a little bit of and look what, oh god, I'm a bus. Look at this. God damn, that's on tape. Sorry about that, future students. Look at this. Look at everything. Look how beautiful it is. Now this is not a box, but this is a great example of range. Is this Stelio or Stelio's younger brother? If it's just younger brother, I'm sorry. Sorry. You didn't need to hear that. Um, but seriously, you look down and this is actually, again, another really, really motherfucking great example of how lower time frame analysis can kind of give you a heads up as to what price action is more than likely going to do. Because empty space is my drug. That is what I live off of. That is what I care about. I almost named my daughter Empty Space. Um, when you see here during market hours, right towards the end of the day, last week we created this box 1, 2, 1, 2, 3 area of consolidation. Perfect. You drop down, you go to your open, and again, I'm not going to go down any further, but I can imagine that possibly on a lower, well, fuck it, it's a box, right? Everything will look at it. God damn it, it's beautiful. And here, as we move down, like seriously, I don't know what's wrong with me, but like when I see this shit, I legitimately get amped up. And it's like, I guess just after years of training my brain to positively respond to good setups or to things that make sense, this makes sense. It's perfect. Price action moves down. It goes to touch the 50% mark of this range, which does need to move down a little bit. Right there. It touches the 50% mark of that range, give or take. I guess I could probably straighten that up. On the hourly 30-minute, it is absolutely perfect. But you bounce and the candle closes, and this is again where candles close. When you fall, right? Yeah, see that too, Nadim. When you fall, what you bounce off of, or rather, when you fall, what you grab hold of will determine what happens next. If you grab nothing, you fall further. If you grab something or you pull yourself back up to where buyers were already bouncing it before, you're likely to have a reversal. There was a small area of consolidation here, right? An empty space in between you, right? You had a floor that you had to go and accomplish or go and grab. And you can see how price action goes and puts volume on that floor, literally like it's gripping. It's grabbing that floor. This is healthy price action. You move through the 298.50, and on the 15-minute, you could go as far as to say that there was even more boxes inside of it. So if you said, say, missed your entry on the floor or missed cost basis, you could have used the top of 301.88 as a stop loss, and right as you would have taken that, you would have been rewarded immediately with a first resistance breaks directly outside of you at 305. And then knowing that that's the only resistance that you would have to break in order to go and touch this floor. This is all after hours, by the way. Price action is just beautiful. Now, does anybody want to tell me why you start wicking around at 309 or 310? What is that? Students that have done this before, what is that? Quickly. What the fuck? The floor? No, I'm just kidding. That is the imbalance. That is the 50% mark. In empty space, there's always going to be an imbalance. How you respond to that balance? And look, how do you respond? What do you lose? Just because you reject something doesn't mean you can't convince them in just a second. It's really about what is lost. You lose nothing. You don't even retest. And look what it's doing now. It's trying to grip. What does that do for us? Gives us a box. So if we gap up to cost basis, right? And then we pull back and we get scared, because we get scared sometimes, right? We're looking at 314, 315 to bounce, right? We're looking at ultimately 313.77 to hold, right? If it doesn't, what's the results? It's just what price action says. Stop arguing with it. It is what it is. So this is how we end up coming to conclusions as far as where we need to get out, where we can hedge, or where we can maybe just take it to the down, take it to the other side, right? But anyway, so I mean, and this is just so beautiful. I mean, I could cry. And it's a great example of what we're talking about, of grabbing hold of floors, and in these two specifically, right? Are show, and that's happening now. That's happening right now. Okay, so I seem to have that, Potter. Why is that imbalance and not the floor? No, I'm just joking with you. So where at what point would those wicks have any sort of floor to grab hold of or reject, right? There is, from the floor that you had to the resistance you are meaning to break, 50% imbalance. You could call it literally. I don't even know why I started calling it that. I think somebody else called it. They were like, "That's the middle balance or inbound," but it is, I guess technically sound, but that is the 50% mark, right? That is where, and 50% is the most important number to me. If you think about it in tug of war terms, it's pretty important. You pull the team over from the other 50% mark, there's a good chance they're going to get them over, right? And so even within empty space, within structure, within boxes, within channels, 50% is a big number. So before I had the Potter box, I had like the sushi form of it, which was where I was using the 25% marks within the box. But then it dawned like there is not enough volume at those marks unless it has been consolidating for a month or more. And then there becomes if it's gone past 3 waves on the monthly or the weekly, yeah, you're gonna have, you know, uh, a, what the hell is that? Oh, I'll help you. Hold on one second. I was wondering why I saw that. Okay. you know, as we kind of are getting to a conclusion here with this, I think people need to spend more time looking for good setups on things that have volume and building watch lists that they come back to. Um, like if you end up going and you know, like I think Hims had was it Hims that had a good setup? Yeah, Hims has a great setup eventually, right? Eventually, one day, and that's one thing that I can't promise right now because I mean we're bouncing, we're finding out whether or not buyers want to accept price, and honestly, I could see this thing trying one more time, you know, and maybe even getting up to the top here. But I know that the more that we bounce off of a single floor, the more that I know that's where I want to go short. And that's also, you know, again, red candle right there, green candles right here off the bottom. That's my cost basis right there. So I know that when 5154 breaks, I'm looking down, right? And this has good targets down to 42. It's a good setup. I know the contracts will fit the script. I know that there will be median price targets that are aligned with previous price targets, like $46. But it's a decent setup, right? That's just something that just gets added, right? Right click, wait, let's see, can you do it that way? Or do you have to do the fucking, no. I know this is probably a weird time to throw this in there. Does everybody know what that does? Compare symbol. Does everybody know what that is? I think it's a good tool. No? Oh shit, you ready? So if you want to find out if something correlates with the whatever you're running with, right? I can add something like spy, right? Now, obviously, that really shows very small or little correlation. So it's not something that I would necessarily compare. Go over here and you get rid of it. But let's go look at what's a similar company. Like actually, fuck that. Let's do Elf, right? Which that's actually a perfect example. I'll use that one as my last one. So if I wanted to compare Elf to Alta, right? And I can drag this down. Been a while. A little rusty. Hold on. Well, actually, that's fucking good enough for me. What am I talking about? Look at that. Do they correlate? Right. It's not perfectly overlaying it on top. I think you have to like I forget what you have to do, but regardless, it overlays the price action of something else, right? And in this case, it's weighing, or in yeah, with SPY, it was weighing against SPY, but in this case, it's just showing you whether there's relative price action. In this case, it's perfect. You know, I, I don't use it very often, but it's something I used a lot more. Um, in fact, I think the first time I ever looked at Elf, I overlaid Alta on it. Um, yeah. Like QQQ and Spy. Like you wouldn't just overlaying Spy on hymns isn't really going to show me much of anything. But um, it's just a way to put Tesla um, and uh, shit. I don't know, Rivian or something like that. You know, to see if there's any sort of correlation with price action. Definitely is. All right. Just a little side note there. Something that's mm, you use it. I use it more as a compare and contrast tool. You know. All right. So before, and then we're going to go ahead and hold this in. Um. Hold on one second. Sorry, guys. Yes, I do. Thank you, Lori. I just saw your text message. Okay. Can I walk through how I did that? Did what? The overlay. You just click the plus sign over here, and then you just type in the symbol that you want to overlay. And then I think, yeah, so you can do it this way. So when you do hover, I didn't, this is, everything's changed since the last time I've done it. So you can do it this way, where it's two separate panes, right? Or you can do it and you'll see the new price scale. So that way you can kind of, yeah, overlay it. Just see compare and contrast or test, yeah, just performance. Yep, no problem. All right, so we're going to use this one as another example, right, of grabbing hold of a floor. And this was an equity purchase that me and a handful of people in the Discord made because this is one that has actually stayed on. I talked about it as it was falling. I actually had to stomp out of a remainder of some of the equity that I had purchased back in an earnings around 88, but yeah, right around here. Yeah, it was right around May, right around my birthday, I remember. And that was actually a perfect place to buy it because when it came back down, that's exactly where it bounced off of. And it ended up punching back and filling its empty space. It moves incredibly well, but does not have good contracts. So I performed an equity purchase on it. And walking you guys through this is obvious. Our birthday, my birthday. Our looking at this chart, right? And what how it traded was it is a perfect example of what I'm talking about. A perfect example of how candle behavior, right? We're paying attention to what candles, what are we losing, what are we gaining, and sometimes the answer is nothing, which is better than losing something. And in this case, Elf made a perfect area of consolidation. As you zoom in further, there started to become signs that Elf was reaching max tension, right? And we can do that by looking back into our earliest days of childhood to when we learned how to count. 1, 2, 3, 1, 2, and just the waves alone, right? You can go, if you have trouble pointing those out, you can literally just go where you're like 1 down, right? One up, 1 down, and then same thing, right? So you're looking for those rotations where if you have to track price or just look at where the points of contact are, but you reach, that's where you should have broken, right? According to wave theory and everything else, all of the rejections overhead, that's where you should have broken. And the fact that you don't, the fact that we didn't, was a ultra convincing fact. The fact that you didn't, and that you had empty space in between you and your next structure, was an ultra convincing fact. Not to mention, it just had an incredibly clean chart, clean points of contact, clean everything, right? The box above, which, again, is built up of more boxes, but nonetheless, I focused on the higher time frame because with equity, I'm not concerned. I'm looking for the 24-hour trigger, which is the trigger, right? Above all else. We end up moving over cost basis, which as you reach the final stages of wave theory, that's important. So we're approaching what is now our 4th time. We have empty space up above us. It makes no sense for me not to try to buy. And so I used the 55.13 as my fill, but just as a candle close to my left on a lower time frame, anticipating. So I took it a little bit early, right? But it's equity. I'm not dealing with decay. I'm not dealing with, shorter expiration. I could give that shit to my grandkids from the moment I bought it to, whatever. At that point, right, price moves up, and my concern there is the same as it's the same as it is when I'm breaking up. I want to grab hold, right? I want to show that price does not want to fall back into this area. Price ends up in pre-market, right, moving back into, or actually in after hours, moving back into that area, but ends up opening up the next day well above that, right? And because there's nothing but empty space. Now, you did try to fill that very quickly, and you'll see that's just how price wants to behave. That's just how price behaves when you have empty space. But when you pull back, you hardly lose anything at all. Again, I'm dealing with equity, so that type of little pullback right there doesn't scare me. I do remember somebody in the Discord taking profit on that equity for like $1,000, and I think they bought back in. But that's something where, as long as we do not fall back into the sand trap with any sort of conviction, I'm okay. And not to mention, I'm one of those people who I'm not gonna just accept I'm going to get out where I got in typically. Anyway, we look to our left and we can see our candle closes on the floor pretty much across the board, save for this little anomaly right here, which again, we're going and focusing on points of contact. And then we go to the 24-hour, that's not there, and you have a clean floor. Regardless, how does price behave? Now, a lot of people will look at this and say, well, we're not doing our job. Well, I think we are. Because when you're up against resistance, what are sellers trying to do to you? They're trying to push you back down. And so their goal, if accomplished, should be shown via price falling back down. It does not. It holds, it creates range, and it contains price in a small area right underneath that, putting pressure on sellers every single time they step up, if they do even at all, enough for it to, it's just sitting. This leads to overnight price action, and even I was caught kind of off guard. Not that I needed to do anything about it, but we gapped up, and intraday price action takes over. Well, a couple of days of it, and Elf is notorious for just doing that. It just has to. That's just how Elf moves. Even in the middle of a dead drop, you'll build a box and continue down. I actually love it for that. But moving back to the 24-hour, after we grabbed hold of that floor, and this is a great example of what consolidating underneath something looks like, and then opening up not only outside of that range, but outside of that range on a floor that matters. If it's a floor of a large area of consolidation, you can bet that price will try to explode up, and lo and behold, it does. This just is a straightforward, I mean, you're going into earnings. We talked about this, and I said, if we can get above that top going into earnings, I'd feel a whole lot better, or just up against it. Because if we're going to keep moving, I would prefer that we don't get too far, that we kind of consolidate and build something above it. And you'll even notice that in earnings, the bottom of your most recent price action floor is what bounces and holds you and protects you from ultimately closing back down underneath. Which, damn, why was my box so high? God damn it. But ultimately closing back down underneath, right? Which would then put that empty space in jeopardy, which would have been my stop loss. It would have been, right? And we would have fallen all the way back down to 69. Gumbo. All right. No, it's gumbo. What is it? I don't know. So this, even looking over to your left, now this just explodes, right? It just explodes right up onto the floor. This is earnings shit, so it doesn't even really pay any mind. Unless you move down into the lower time frame, we're just momentarily. Take a look at that. You respond. But you easily blow through that. Candle closes on the floor on the 30-minute, and you're off. And it's been in a chop zone ever since, as we kind of sit just like we did before. Remember what we just talked about? We're actually approaching, right, the floor, the real floor, which is up there. It seems like at the moment we're taking refuge by just holding here. So the next move up, inevitably, if we can, is 123. And if that can, and this is actually something that I'm looking forward to holding much longer, because of the way the chart is set up. And this is why equity purchasing with this system makes life way easier, because you can look at a chart and see the potential. Let me really quickly, after I point this out, right, the empty space above here and above that 186, that's inevitably going to get filled. I've gotten a couple questions on, why I've been holding Rivian, or, what do I see? Let me show you what I see on Rivian, and why one day I'm going to be laughing to the fucking bank. Again, I don't care if they made fucking brick shit houses on wheels. As long as price shows me, right, that is going to respond, or going to, or empty space areas with, and not to mention who's invested in Rivian? A lot of people. Not just people, important people. Uh, you know, you got fucking Bezos. He's got these Rivians all over this place. We got them dropping off packages now. They're kind of cool. I really want to steal one. Um, yeah, way cooler. But there is big money, institutional money that's hanging out in here. Let's also not forget that Rivian, where is it? You little fucker. Hold on. Sorry, I say bad words, guy. Rivian somewhere up here. I don't know why. I can't remember where it's at. Has a gap. Anyway, we'll figure that out. But it has a gap up there, and even that's likely to go and get filled. But my job when Rivian gets here, which I would absolutely buy options on this, when Rivian gets back up above that high and starts nearing this 1877, you bet your ass I'm betting that there's some news. I should write that now. I should literally write, right? Because that's likely right here. Mark my big green dingus. It's going to happen. So when we're at $23, you know what I mean? Full port, I mean, we fucking the clip will be filled. One in the chamber, full clip. Not one out of the chamber because you've already racked it, and now technically the clip is missing one. Full clip in one in the chamber. Risk. I'm not going crazy, but I mean, I'm going crazy. I already have equity on it. I'll probably be on multiple series of expirations. And I'll either get my ass kicked or I'll make a fuck ton of money. So full port without looking. This workshop's going off the rails. Um, so I just wanted to show you guys that because that's another example of something that I'm holding because it's right there. It's going to happen. Elf, I look at what it has going forward. I look at you've got a little small box there. You got a box technically that you punch through to the downside. So you're really just looking at the 123 and then you're looking at 128. And then realistically, it's not until we get to 137 that we have a full for sure signal. And there's a sneaky little fucking gap right there that you don't see. So 171 would be my appetite if we were able to get above that floor, which is right here to our left. And I think what that would do, points of contact, I'm going to give it the whole range, even though it used to be a box. I believe that 173.50 would be our ticket to go up and fill the remainder of that empty space outside of that 185.50. And that's where I'll probably go ahead and decide if again, my equity is all the motherfucking way down here. At that motherfucking point, I've probably made, I'd have to do a calculation real quick. Let's see. Let's just say I'll have a lot of money. You know, um, I've got. I'll tell you what I got. See, you can do the math. So I've got 100 shares at 55.14. I had 200, but I did after earnings take some bread off the table because the position was paying for itself. It depends on the stock, Guardian. Equity or leaps is a situational thing. But regardless, when I look at a setup like this, right, I can with the current. I mean, there's still. I mean, there's still a chance that we might fall. Right now, I don't really want to hold my equity anywhere below 110 because that's going to bring me all the way back to 100. Which I mean, I guess at some point, yeah, I could tolerate that. That would be okay. But anything underneath that, I mean, that's game over. And at some point, if we lost 101, I'd rather look at a rebuy at 110 and just watch how that responds. And with equity, I'll buy it there because I know it's going to bounce. And then if it fails, I'll sell. And it's like kind of gets into like scalping with equity for a second, but you know, if you do it the right way. Um, anyway, lesson here, and the last thing I'll say about this is we're going to be looking for the same thing to the same lesson that I'm teaching you guys about grabbing onto the floors to appear here on Elf, right at 123, and we'll watch how price responds to that floor. But that'll determine whether or not we're able to move into that second price mark. And so that is the perfect. This is a great example. It has been a great example of what that means to see price accept or grab hold of a floor. And this is something that when you guys do your charting tonight, you know, keep an eye out for this. Look for it because the more that you see it, the more it becomes relevant information, and the more your brain, which has a filter that looks for relevant information, is going to see these type of patterns or these type of occurrences, and they will be easier for you to spot. But with that being said, this is I think been a pretty damn good class. Um, does anybody have, and I know that we've been answering questions as we go, but just to stick to the, you know, I want to make sure nobody is left behind. Does anybody have any questions? We will be talking more about this tomorrow in reverse. And I'm again taking my time. So there's a lot of things that we have not covered. We're still in the very beginning stages of going through this workshop. So this was absolutely, yes. You think I would say I would not talk this much without recording it, my brother? Absolutely. Colleen, all good. Take your time. Take your time. It's harder to find boxes on the 24-hour than the smaller time frames to me. Any advice on that? If the 24-hour is hard to find boxes on, then the 4-hour is just as okay, right? Higher time frames usually involve anything above the 4-hour or anything from the 4-hour to the 24-hour to the weekly to the monthly, right? So, or try them weekly. Thanks, got in trying to learn it. If you guys are trying to learn at work, listen, you can't do it. I get it, and I commend you on your effort, but this is something that take your time, okay? This is it. Make sure that you can give this the attention, even if that means you're sitting on the toilet. I mean, don't tell me. I don't want to know that you're listening to my voice then, but please don't. But you know, whatever, if you even it's any quiet that you can get, that's the time. Not when you're trying to multitask. I do my best work on the toilet. That's very good. That's permanently etched into history right there. Everything you guys are saying is being recorded. I have it on the side window of the. There you go, Juan. Let's maybe save that for another time. All right. Is there certain filters that can help with finding boxes on FinViz? How are you finding their stuff outside of the usual suspects? Mild, I am honest with everybody about this. I am and will accept the fact that I am in a position of privilege. I don't have to go out too much. Just through my usual process, I find good shit. But I also take requests from around 300 to 500 people, you know, maybe not a day, but I certainly get up there in the amount of people that I'm taking requests per week. So I see it all. You guys are kind of my eyes, in a weird way. We live in a symbiote. If you guys weren't here, then I would be using some scanners, but I'm kind of a, maybe a little bit old fashioned in the way that I kind of like to mosey through sectors. But I can look at a stock and in the first 5 seconds determine whether or not that's something I want to trade. I mean, I could, flipping through these, nope, nope, down, yeah, nope, 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 yes, down, or up, yes, when it breaks that range, down or up, nope, maybe down, not up, maybe, actually. Damn, I had to write that one down. I've been getting cooked by crypto. Anyway, yes, maybe, but not absolutely fucking not. Nope. Damn. Not now. Nope. Yes, down. Yes, down. Maybe up. Yeah, 150 areas if you did. Um, nope. Nope. Yeah. Nope. Oh yeah, we're back to square one. So there you go. I mean, that's it. I can chart, you know, uh, quickly by just scanning like this. Meta's too expensive anyway. Tomorrow, damn, that shit looks sweet, guys. Let's remember to look at that tomorrow. MU, yes. Yes, 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 yes. I fucking, ugh. Ugh. Yes. It's going to take some. I'm hoping earnings is going to be an explosive move and doesn't lock us into purgatory once again. Because when you start getting past 3, 4, 5, 6 waves, shit gets freaky. When and where? I would like for you guys to have your homework done, preferably by the end of class tomorrow. I don't want you doing it during class, but I mean, I'm not going to punish you if you don't get it done. This is for you. So, do as many as you want. But Mara needs to yeah, I mean, shit, dude. Mara could gap up. I think the only thing standing between you and new are, I think 1723 is step one. But ultimately, I aim for, and my box is all fucky. Who's drawing these boxes? I must be getting drunk and drawing boxes. Don't drive boxes drunk. Um, Especially shit boxes from Rivian. But yeah, 1870, and then there's a motherfucking gap up there that honestly I would probably want to take a piece of too. Shit, there's empty space all the way to 2250. That's the ultimate potential there. He's good. Now this chart as a whole, ugh, preppy. But who knows? I do. Once that triggers. Kids, don't drink in box. Don't do that. Don't do that. But anyway, yeah, I can make determine what I want to do. So if you guys asking me for things, yes, um, we together, I would say the whole Discord has got to be. I mean, if you put us up against real scanners, like when you have a group, a large group of people who are all looking for the same thing, and what I'm hoping here is that this gets even better because there's going to be a lot of people who are watching this live now. There's going to be a lot of people who watch this later. And my hope is that with this class, I make this far simpler. That you guys can, nope, yep, nope, maybe, nope, too expensive, right? Nope, yes, but not now, right? That one actually, it's too late, but you're able to go out someday. That actually doesn't look that bad. Uh, Fuck that. Ew, gross. There you go. There's one. Pure storage, right? That's actually a kick-ass setup. screenshot that. That looks inevitable. Matters of fact. Um, but that's where when you and let this be kind of the closing statement here. Um, well, when you can do that, when you can scroll through and you can just simply know by the way that something moves or the way that something is consolidated or its lack of movement or its movement or its good contracts or its bad, when you can do that, you know you're able to identify a good setup between a bad one, and you should be doing it. You should be trading, real money and all. So, um, yeah, I might save some of these questions for next. I've looked for the gap up, gap downs. Normally, after some time, it will begin to consolidate again. But like Potter said, I will go through my watch list, and you can see if something is okay. There, this is something I've tried before. If I've missed something on my regular watch list, okay, cool, that's awesome. Maybe you say this later in class, but how do you decide your position size? You recently said you rarely use a full size, but what are you seeing on the chart to really determine that? Probably by percentage, since everyone is going to be different. Yeah, I mean, standard, like what percentage of your account are you willing to risk? Um, you know, th- Let me say this. I keep enough money in Thinkorswim and in my equity positions that, like, if I blew my account, which I haven't done since I've moved it up to 50. um if I blew my account, I could fill it back up, right? So there could be a situation in the future, like maybe Tesla squeezes again, or you know something incredible, something. I mean, MU is tempting, but it's earnings, and I just can't justify that. But there is a situation where I would put $5,000-6,000 into a trade. In the grand scheme of things, the percentage risk for me on that, I think for the account would not be, that wouldn't be good at all. But for me and, net and what I could afford to put back in there. But there's a reason why I only have 50 in there, because I don't want to think like that. I keep my risk low because I am able to make what most people make off of 20 or $30,000. So a lot of the times, you know, I I mean, don't get me wrong. I would say that a lot of the times the full size positions that you see me take or that I do take, a lot of those actually happen admittedly during intraday on higher time frame sponsored lower time frame moves where I see a 24-hour amount of empty space like IWM and I see it crashing, and I'll hammer that because in the moment, right, I can kind of cut tail with a market sale, but I would say that my most consistent positioning, around 1500 to 2000 is in swings because I don't day trade or do intraday trades with full size often. I mean, maybe once, twice every 2 weeks. I'm pulling the trigger like that. But I mean, let's save that for, and that's definitely something I think we can talk about when we get to that part of the thing. So normal trading hour, yeah, intraday is just a normal trading hour. Sorry, I was like, what do you mean by that? Alrighty, so your homework again, go back to March, just go find boxes, don't overcomplicate it. Anything like that. If you have any other questions or anything like that, go ahead and write those down, because we're going to be talking about the same thing tomorrow, and you can feel free to please ask those. Um, don't want to information overload here, but I will. Are you submitting? What is that? Is that a tiny ass little box right there, Alex? Banned. All right. I'm gonna go ahead and close the recording out. But I will see you guys tomorrow again at 5. Good questions, and yeah, good job. See you. Mic check. Okay, for 1 second there, I thought my mic hadn't been recording this whole time. Oh my god, my heart.